Last 5-6 days, our equity investors' phase has become too long. Why it is be too long? Because market is getting corrected. Is it an investors to look for the correction with a long phase, or speculators has to look the market correction with a long phase? It is always the speculators will burn the burnt of the market correction short duration time. As an investor into an equity market, if you say that you are surprised with the market correction, then I think you are trying to mislead yourself. You know that last 6 months to 9 months time, that Fed is likely to increase the interest rates, and in turn it will likely to get impacted in the Indian equity markets. It's bygone conclusion that market may face some correction. How much correction? Nobody knows, because the amount of interest rates going to be increased in the Fed system is going to reflect somewhere. We also know that whenever sell on rumor, buy on news, that clearly shows there is going to be an intermediate volatility during the phase of some uncertain events. Now look at across the globe, one side crude price is going up, there is some place in the world there is a talk about a war, some places there is going to be interest rate going to get hiked. All these negative newses will put a pressure on speculators, because they always leverage and try to buy. The moment they are going to get into pressure that market is likely to correct, they read newses, they always become negative bias and try to read only negative news, because their money at stake. So for speculator, this could be a testing time. For an investor, this should not be a testing time. This is a time people should understand what is the equity market. Is it goes only always in one way direction. Along with the speculators, there should be one more breed also if you'll get little surprised or pain the way that market has got corrected. That's a new age investors who have stepped into the equity market between the last 2 years time, thinking that whatever they invest, the money goes up in one directions. And people have become crazy. They are invested in there 4 crore plus demat account has been opened. That is 10 crore investor have been invested in cryptocurrencies, and lot of investors think that direct investments in mutual fund also will help them to grow. But the bottom line they missed is that any asset class, let it be gold, silver, any commodity or equity market, doesn't go in straight line. For example, your ECG doesn't go in straight line. If ECG goes in straight line, you know what is the end results of it. So anything goes up and down, create an interest in life that will give us an opportunity to learn, and from there we can take it forward. For example, always the expert says, if you want to learn in the equity market, don't read too many things. Just go back to history and see what history has told about what happened to the equity markets. If you look back, the same thing, you know that nothing great is going to happen from here on. Look at it last 5 to 7, in the last 7 times of the US Fed rate increased. In the 5 times, after once the increased rate cycle started off, the market stabilized and started to move out. Till such a time, it has bottomed out. So now there is a talk that from March the interest rates are likely to go up. Probably if the history says it shows that bottom out should happen in a couple of months time. From there market may move one direction. Is it, I am an Indian investor, do I need to concern too much about US Fed movement, or Indian interest rates also likely to jump the way which the Fed is going to increase? That should not happen, because the interest rate at Fed and interest rate at India is completely at a different level. So although the Fed might increase 2-3 times or 4 times this particular year, but the Indian interest rate may not go that fast, because Indian economy is built in a similar different directions. And Indian growth rates are expected to be 7-8% as people have been talking about. And also the interest rate alone is not a criteria for economy or equity market to go up and down. Along with the interest rate, there are other parameters you have to look at, how the fundamentals are changing, how the growth of companies are going to reflect, and how it is going to impact the earnings of their companies, and how the share price is going to get reflected. The interest rate, if it's not a one condition, market may correct, but then other aspect, if you look at it, the fundamentals of the companies are quite changing fast, then there is a possibility the market may bottom out and then start moving about. Probably there could be some decoupling between US market and Indian market may stabilize. Although the FI's investments cannot come for 3 months or 6 months, invariably they have to come, because it's a only market is going to grow at the rate of 7%. Only country in the world is going to grow beyond 7%. When there is an opportunity to earn, naturally the FIs will start coming back to India. In the meantime, this is a great opportunity for Indian investors, because if you look at any asset class, let it be fixed deposits, because fixed deposits are offering 5% return for 1 year time. If it is 3 years time, it's 5.5%. If you look at the gold or silver or any commodity, probably the one asset class likely to give better perform over a period of time, it's going to be in equity. So there should be definitely the retail investors sitting outside with a huge liquidity may start looking at equity market and come through mutual funds to make money. So for a mutual fund investor, I don't see anything big issue as long as your financial goals are 3 to 5 years away from this. Although market may correct in between, there is a possibility it can go up from here on, and then still you make quite a good money out of it. But if I am a stock investor, I bought direct stocks without understanding the fundamental, without understanding equity market, I leverage all that, then there you have no worry to go, because there are some certain stocks which has gone manifold, and there are the new age companies have really given a tough time for the investors, seeing that so much of time subscription, but after that it is when it listed with this onslaught of correction, market correction, they corrected 40-50% from their peak. But other side, if you look at it, good quality company with a good cash flow, they are not participate in this rally. So these stocks has a potential to deliver some amount of return that likely to bring stability to the equity markets. So if you are a stock investors, bought a bad stock and think that it is not, fundamental doesn't support that, you can sell and come out of that and reinvest when opportunity comes. If you are a mutual fund investors, your goals are 3 to 5 years term, stay invested, be cool and don't worry about that. If you are slightly irrational person, then my suggestion is that don't look at market for next to 15 to 1 month's time. When it does settle down, come back and look at it. Or if you are a rational person, always think that opportunity comes in once in a while. If you have a money, start investing in a staggered manner over 3 to 6 months time, whatever the money is there. Start whatever the allocation towards equity. Always please keep in your mind that asset allocation plays a major role in wealth creation. So you have invested more money into a debt anticipating market as peak. Now you start diverting as per your asset allocation to equity, stagger it over a 3 to 6 months time. Definitely you earn better return than what your fixed instrument is likely to give over the next 1 year's time. So for an investor, this could be an opportunity to look back and start investing. For speculators, please understand equity market is not one-way direction. When you have to try to invest that, you need to take risk. At how much risk you have to take, you should understand that and then start investing. For millennials who have jumped and started investing, please understand that the equity market needs some expertise and knowledge to invest. If you have jumped by fluke and then you have made money, book profit, try to learn and try to participate in this journey. This is a equity market journey is not about 3 months, 6 months, 1 year. It's a journey for years and years to come, because a country like India, it's going to be a great country with a higher growth over a period of time. Thanks for listening to me. This is Suresh Parsadi, Certified Financial Planner, is signing off. We'll meet in some other video. Bye.